Yeah.
Welcome to Momentum Monday. Today is October 29th, 2023. Howard, are you following earnings season? Are you thinking about buying any dips?
Um, God, I am it's a weird time. I'm very focused on news. Never, you know me, I never watch news, but I'm very focused on bigger picture stuff, not the markets. The markets are doing what you would think they would do at the. So you walk us through the markets, and I'll tell you what I'm saying.
The market is still in a correction mode. We continue to see more distribution days piling up. And you can see the past few weeks how many big red bars we have. These are all distribution days. And you
Yeah.
see the bounces are very tiny, tepid bounces coming on very low volume. So definitely corrective tape across the board. Almost any momentum stock that has held somewhat up until a couple of weeks ago, everything was really hit, including cybersecurity, anything you can think of.
Right.
We're in a correction. What's even more interesting is that so far this earnings season, we've seen company after company come and completely crush earnings estimates, beat earnings estimates, beat sales estimates, raise guidance. And then for the most part, their stock is being sold. I think this is a very dangerous market reaction. Anytime when you see poor reaction to great news, to great earnings, this is bearish market behavior, and obviously the indices are still down just 10% from their highs. And their 200-day moving average is rising for the most part.
Yeah.
But this is a very, very bearish behavior to me. Anytime when we see, take a look at Meta, crushed earnings estimates, raised guidance. The same with Microsoft and Google. And all of them are acting really weak after earnings. Obviously, the weight of the overall market is just keeping a lid and just pressuring them down. So this is what I'm paying attention to. Market reaction to earnings actually shows the true market sentiment. And currently that sentiment is very bearish. Obviously, even in a very bearish market environment, we see the occasional bear market rally, which can be, gigantic and quick and unexpected. But overall, ever since March, ever since that US debt rating was downgraded, the US stock market has been in a downtrend, and this remains to be the case. I don't care about the bullish seasonality. We're not seeing any buyers stepping up. We need to see that first.
Well, yeah, I'll give you my thoughts. So the trade, there's no trade for me, right? I'm a trend follower, so I mean, even Google, I said below 130 is just retreat. So I had to sell, and we'll revisit it. But I own some indexes, but I'm saying I own some extra Google, and below 130, there's no, like, I think we can bounce and have rallies, but I'd rather add it when the market's just stronger. I don't, right now, there's three things going well, right? Like, there's Bitcoin, there's uranium, and there's gold. And so why are they doing well, right? Like, they're doing well because there's like a World War III trade on, right? Like, it's the market's a forward-looking machine. So not to be a doom and gloomer, but you can foresee, for the first, it's trending on Twitter. So I'm not like some doom and gloomer, but like, if you see that trending, that's not funny. That's not anything. It's just sad that's what's trending. It just shows you how people are pushed to the right and the left, right? You thought you were progressive, and now you're far right. You thought you were far right, now you're left, depending on which side of the war you're on. And Bitcoin, it's funny. I'm going to share my screen here, Ivan. This is really funny. This is a really
All
smart
right,
guy.
let me stop sharing so you can start
Yeah,
sharing.
I'll show you. I'll show you some charts so people can see what I've been working on because, I manage a lot of money for other people. I'm trying to get my thoughts together. Can you see this?
Yeah, we can see some
All right, so
tweets.
Nikita,
Yeah.
Nikita has sold a couple companies, app companies, and he's like anti-crypto, funny guy. And he said, I don't believe in crypto, but with debt levels where they're at in World War, he said this on October 20th, in World War III unfolding, I'm not sure what else I believe in. And I think that's really funny, but also true. Meaning Bitcoin is proving to be a gold trade, a more easy to buy gold trade for a younger generation. And for if you're a Muslim, if you're Israeli, if you're Ukrainian, if you're Russian, if you're Chinese, especially, it's also an anti-American trade right now with Gensler and the SEC. So it's like the perfect trade because it's somewhat liquid. There's not infinite supply, and it's not zero. Like it's still around. So I think he sums up my view on crypto. Right. I'm just going to push this off to the side. The next one would be uranium, which I don't know. I don't have a chart, but let me stop sharing. Can you pull that up? URA.
All
Then we'll
right,
come back to it.
let me share my screen.
Then there's uranium,
So,
which if you're in a World War
uranium,
III, and
I'm showing you the uranium market.
URA, I think is
URA is
no, then maybe it's
just
not.
a different ETF. It looks the same.
Okay.
Uh,
Yeah, I'm not long uranium, but I'm like in a World War III scenario right now. Everybody's your enemy, and everybody who doesn't have uranium is thinking about uranium, whether you're
but
Iran.
it's also a clean energy play, Howard. Uranium.
Yeah. But America's just so not. There's so many. It's just not really, in my opinion. I think this is not a trade I want, but there is a case to be made, yes, for clean
And
energy.
also an alternative to, high oil prices and just being more
Yeah, if we
energy.
don't blow each other up. So yes, so I'm saying World War III trade. The other World War III trade is starting to show its head, and it's been the weakest because of rising interest rates. Is gold, right? And unless you're a futures trader, this is about all you can get other than the miners. And I would say that's a pretty good 10-year base, right? Now I'm hoping all three trades.
And silver as well is starting to perk up a little bit. Obviously, it
Yeah,
doesn't.
but I don't want to complicate things. There's the World War III trade is those three things. And I would be thrilled if we come back in 6 months and these things completely imploded, right? For the reasons I'm talking about.
There is one more group, Howard, though, that is doing really well,
Uh-huh.
and it's oil and gas
Healthcare, hospital
tankers.
stocks.
No, oil and gas tankers, just oil and gas transportation and storage stocks.
Sure, because
All
of
of them,
pricing.
There's
Because the pricing just fucking
they're
shot up.
trading
Yeah.
stronger than gold. Here you go.
Yeah.
This is TK tankers near, I think, all-time highs, maybe, or multi-year highs. Breaking out last week. We have
Yeah, but this is more like because of the war. This is another war trade, yeah.
it's the same trade as gold, Howard.
Okay.
It-
Yeah, I mean, I don't disagree.
I'm just showing you the one remaining place in the market that is strong.
Well, there's also one stock, Deckers, which I don't even know what
Oh,
that is.
definitely. I mean, this stock, no one really
You
expected.
talked about LVMH of America, right? Like
This
they
is
have.
very interesting. I mean, I've been reading about their history in the past few days.
Yeah, I told you
This
about it. They
stock
own
is
all these
up.
great Americans,
It's up 500-600 times in the past 20 years. IPO'd in 93. For the first 7 years, they went down like 90%. Like their stock crashed the first 7 years.
Yeah, they're the LVMH of what? Let me see. This is the other thing. It has
They
two.
own several brands, Howard. So they own that UGG, those like lifestyle
Yeah,
shoes.
no. They own that shoe, that running
They
shoe.
own Hoka, the running shoes. They own 5 brands.
No,
But
they own hundreds of brands. But what I was saying is, here's when I talk about trends, I always say like find stocks that have good price relative strength and low social strength. That stock is up how many 1,000% and 2,000 followers on StockTwits. So, the proof is in the pudding. It's still an undiscovered company. I'm not saying it's cheap or whatever, but this is for whatever reason, an American love story with the brands in this portfolio. So it's kind of like our version of LVMH.
Yeah,
Okay,
it's a
so now
California company. Yeah.
let me reshare my screen, buddy, and just walk you through what I'm seeing.
Okay.
All right, so you can see here, I think Charlie put this together. Can you see this chart?
Yeah, total return.
Yeah, so you can see it's the top 50 stocks are up. It's not a bad year if you're in the QQQ or in the top 50 stocks. You're still up over 20%. And then you can see that equal weights down and small caps are down. And so you can see it is
Oh.
tech or okay, so you've got that. Then I mean this is a chart that matters the most to me. You know, there's a million ways to look at it, but these are new highs, new lows. So you can see it's the opposite of what you want. You've got not that we, you know, listen, if there's a if all of a sudden Iran makes up with they want to kill everybody, and Israel says, you know, we forgive, and if America pulls out of Ukraine, maybe the market shoots up 2,000 points tomorrow. So, you know, don't trade off this, but new lows make new highs and new highs make new lows. Not what you want to see in a market that's had, like you said, distribution and the three best sectors are like cyclical slash warlike defensive, you know, freakish type sectors. So there's that. The next one that I like to look at stocks above their 50-day moving average. You can see we're at like 10-ish%, which is, you know, we're getting there. We're getting to a point where like whoever we wanted to sell has sold, right? It doesn't mean stocks won't go lower, but it's typically, I like seeing this. You can see in 2020 and COVID, we got down to the worst levels ever back when we were like bullish March of 2020. This was a great signal that I didn't really take last year, and we're getting to that point now. A couple bad days, and you're right back down to last year's numbers. That's another one. I think this is really an interesting chart because it's about rates, and this is most investors think rates are going to come down. And we know that, you know, I'm not bullish or bearish, but I don't like seeing that everybody now thinks, oh, rates.
Including home builders, Howard, because
What's
now,
that?
including home builders, because now all the home builders, since people cannot afford 8% mortgages, home builders are offering people, you know, 5.5%
Oh,
mortgages.
are they?
Yeah, so they really expect the rates also to come down. Yeah.
Yeah. It's interesting that they're getting teased because my friend at Meritage Homes is like, their balance sheets look great. So even they're trying now to move product. You know, my wife has told me in local Phoenix that like there's just nobody showing up at everybody wanted to move, got their home, and if they didn't get their home, they're hoping they don't have to go back to work and switch cities and do things. Listen, there will be an event that makes people move. What I don't like about this chart is everybody's expecting rate. Not everybody, but Barron's came out this week too saying bonds are a buy, right? And I think the selling's been so relentless that I get it, but I don't like seeing this many people saying, "Oh, it's an obvious trade." So, you know, what happens if rates just stay where they're at? I just think people are you know, that down. What was I? A couple other ones I was going to share. Crypto. So I think this is interesting. StockTwits now has much bigger market section up here. So if people go look, and now we go down, I mean, it's really fun. You can go look at hundreds of trending stocks and how stocks are moving up and down the watch list. So it's really interesting for someone like you who want to match momentum versus, and you can see this weekend, the top 30 tickers were crypto.
Ah, interesting. Yeah.
Yeah. So meaning it's like usually like the top 4 or 5 are crazy. I haven't heard of any of these things, and they're all like there's a so
They're like
so
penny stocks, probably not very liquid though.
no, they're not liquid, but I'm saying the fever is still, you know, crypto is on people's minds because of the weekends. You know, it used to be on weekends, nothing happened. Now there's more activity on the weekends, and that's because people still believe there's still a whole world going on there. I thought this was also an interesting chart. It's not the best time to have this negative moon at a time when America is kind of debt. You know what I mean? And we've seen the way college kids are behaving and you know, just the stupidity out there. You know, America has not spent their money well. And this is life expectancy versus health expenditure. And you can see where USA is following here. So, if, you know, unless Ozempic continues to do miracles, this is not a good trend. You got healthcare costs going up and life expectancy flatlining and coming down. So again, we're falling behind, right? We're falling behind in well, people are catching up on the war trade, just because China, Russia got a lot of enemies out there. Second is our debt levels. Third level is, you know, just the way we spend money as a country because we're so big. So again, you know, going back, I'll stop sharing. Let's go back now to your screen and go through.
Okay, just stop sharing.
Oh, hang on one sec, Ivan. I was just going to show this one last chart. This is it bounced here. This is the top 7. This is like
okay.
7 stocks, and you can see we're at like a major level of support. So don't be surprised to see a bounce, but if we break this, could, you know, you can see another 20% quickly.
Well, Apple reports this week on Thursday after the
Who does?
Apple.
Let's pull up the chart on here. I'll let you pull up the chart.
So we have FOMC on FOMC meeting on Wednesday. Power conference on Wednesday. Obviously, it's like an earnings report for the market. So definitely it could be a big mover. I mean, the market expects no change in rates. And then we have the next day after the close, we have Apple, which has been trading with the rest of the market. Apple is basically the market, just making lower highs, lower lows.
Yeah, I don't know how they met. Here's the thing. Again, it's such a global company, but we spent some money there this week. Ellen upgraded her phone. And Ellen and I are the worst tech people. So just imagine us walking in on a Friday crowded. Was crowded, Ivan. And a couple things that surprised me about Apple is it just gets better. Forgetting the product for a second, so she walked in with a 13 phone and an old MacBook, really old. And she walked out with the new light Mac Air, which was only $1,300, which is probably cheaper than her bigger MacBook 3 years ago, and a new iPhone 15. And then they took her old computer for a few $100 and her old iPhone for $500. So they handled everything there. They, in front of you, they empty your phone so that you know everything's, you know, you don't have to worry about your data getting anywhere. Hand you 2 new products that you're going to be happy with for the next few years. Everything's updated from the cloud. I mean, I think the stuff we take, this is why if the world goes back to being sane, just sane, and rates stop going up, Apple's going to continue to lead, right? I think the big issues will continue to be, you know, the global supply chain and just who our enemies are. But I think we can see that Apple is still the leader. And based on the experience that we had at the stores, they're doing things that ensure their success for another 20 years. The retail stores, the Apple Pay, the things that you're not counting now, the subscription stuff, their ability to take your old products in and give you a little credit for it and like fix them and then melt them back down and give them away or repurpose them. So they figured out this whole circle. And much like the auto manufacturers do with scrapyards, they're doing, except they own the whole loop from chip to construction. And so it was a fascinating experience you know, because I haven't bought stuff at the Apple Store for a while, but going back in there, really saw the loop at how they do everything else. So again, I think, you know, you're kind of hoping for a 20-30% crash in these.
Oh, of course. I mean, any big correction.
If you're 20 years old, you should be rooting for that. You should be rooting for peace and clear minds. I mean, and people to like calm down. And you should be rooting um, for lower stock prices,
Yeah.
because you've got 40 years ahead of you. So that's kind of where I'm at.
Yeah, the silver lining is that with all the, I mean, layoffs and other cost cutting that all the big companies started announcing last year, October, November, December, we're really starting to see an improvement in their gross margin. If you even look at Apple or Microsoft or Google, there is an improvement in all of them all of them margins, which is good. The market always likes to see improving gross margins.
Mm-hmm.
Obviously, they're not cheap, especially if interest rates stay where they are and if they continue to go up.
Mm-hmm.
But at least they've taken their house in order and they've been cutting costs and they're more productive, more efficient companies in general.
Yeah, I mean, if I was going to look at one index to short, it would be small caps. And I know that I'm not, I'm not.
Everyone's doing that. Everyone's shorting small caps, thinking that maybe 10%
Well,
of the
here's again, I don't short. I'm saying
are not going to survive because of the
I
price.
just think we're in an environment that people don't understand. They don't understand, which we talked about sea change, which is I linked to it today, the Howard Marks piece.
Yeah.
It's not a good time. Well, this is pretty much driven by banks, this index, right? Small banks. So it's
Not
actually,
only, I mean, maybe banks are like 10, 11% of it. So they're
yeah.
undercovered.
I worry here because they're at such a disadvantage.
Look
Small
at the
business.
biotech, Howard.
What's that?
Look at the biotech ETF.
Yeah. Yeah. Again, it's stupid to be negative here, but because I don't like selling weakness, as much as I, don't like buying weakness, I just like buying strength. So I'm not an expert at this, but we're in a different macro environment than we've been in the last 14, 15 years because rates are going the other way. We've
Yeah.
always had the ability for the Fed to cut rates. And I don't think the Fed can cut rates, right? Oil prices could be surging in the next few weeks if the Middle East heats up, right? And the political race is just going to get messy. So again, there's not many levers the U.S. can pull here, and the markets, everybody's used to getting bailed out by the Fed, and I don't think the Fed can bail people out. So people have to just use stricter money management right now. And you obviously, Ivan, are probably very high cash. You're good at this.
I'm very high cash. I mean, I have a very simple rule. Like I'm aggressive on the long side when the market is in an uptrend, meaning when I see all the indices, including small caps, trading above their 20-day moving average, and then their 10 is above their 20. And then now we have the opposite of that happening. So when we have that bearish condition, I'm usually heavy cash. I take like intraday trades because intraday there are always opportunities if you're active trader, and you can try some on the short side. But personally, I'm not really good on the short side, so.
I think we're also praying the wrong heroes. You and I don't have any trap. We do this as our own homework. But let's pull up Cat. Let me give you a couple of examples. Let's pull up Kathy Woods.
Yeah.
If you asked 1,000, 10,000 kids under 30 that invest, if they heard of Howard Marks or Kathy Woods, what would you think the ratio would be? 90-10 that they've heard of Kathy Woods, 10% Howard Marks?
Very likely, yeah.
Okay. Well, so we're praying to the wrong gods. This woman is more popular than ever. God bless her. She's been promising, I don't know, for 2 years that she can do 40% a year, and meanwhile, she's still in the most unprofitable stocks, right? And Howard Marks, who manages trillions of dollars through his words and through his, the people that follow him and the money that he manages, and he's telling people that credit is the future, right? Owning things. Again, he's not telling you to sell stocks. He's just telling you what he thinks, right? And he's a conservative guy by nature. And he's telling you right here that you can go earn 10% in private credit with very little risk. And that's what the S&P has returned with a lot more volatility for the last 20, 30 years. And that could get, that we could just be getting going on the flip of that, right? And if we go through 3, 4 more years where the markets go sideways, and that gets even worse. So I think people have been praying to the wrong gods. That's, so people need to start, switching up, as I talked about, who they read. They need to start finding people that are outside their norm and find some new mentors. And you can stick with your old strategy. I just think you have to be really precise about your money management right now. So that's the way I hope I'm wrong, but I think we're both in agreement here the last few months. It's not good.
Oh, I mean, definitely, as I said, the market is in correction mode. So unless you're really nimble and really skillful with risk management, you're much better off holding a large cash position.
Yeah, and for a lot of young people, like
your cash.
especially, I would reduce social your social media intake in a tough market. Less noise, the better. Find a few people that you can get some mentorship from. Really shrink your reading list in a bear market and adjust them to find people that have that will talk to you and consult you and mentor you. And this is a time to preserve capital. No one likes to hear this if they're down 20%, 30% the last 2 years, but it's better than being down 50 or 60. And this is the type of market that is really going to surprise some people.
Yeah.
But again, historically, these 20, 30%, and we're not in that. The QQQs are still up 30% on me. So
yeah, I mean, QQQ, they definitely are having an amazing year, but also remember they were down 30% last year. So they're still down for the past 2 years. Obviously, long term, they've done amazing. The past 10 years has been just
and if we go back, the one that Greg, we even had a chart. I don't know how far back you can go.
This is it covered.
Yeah. So what you don't see here off to the left is
okay.
Oh, yes, you do see it. So that rally in 99, that rally in 2000 after the first break to the end of 2000, it feels a lot like this rally that we've had this year, right? Where the difference between 2000, late 2000, and where we're at right now is rates and inflation are going in a different direction.
Okay.
No, so what I'm saying is I see some similarities to the bubble of 2000, where you got this rally in you're not seeing it. No, that's not the
okay, this is the Nasdaq composite because it has more data. It shows you
I'm trying to see. There was that rally right here at the beginning of 2000.
Then you have lower high.
It feels like we're right about September 2000.
And here also you have lower high.
So just
lower low.
History doesn't repeat, it just rhymes. And I really feel, again, here's what's different. The 7 companies that make up the Magnificent Seven are profit machines and are benefiting from high interest rates. So history will not repeat here because the index is constructed with way more profitable businesses, but it can rhyme. And we could be in for a couple more tough years. And but again, play what's in front of you. I just thought we'd go a little longer.
Any sizable and any long in duration correction is just historically has created amazing opportunities. So there's just nothing to worry about. Like your job is to keep your drawdown small so you can grow your account quickly over time. That's the name of the game, basically. Keep your drawdown small.
Microsoft chart. Wow, what execution by Satya!
Yeah.
What incredible execution. And Zuckerberg, what a comeback.
Incredible. He's just an incredible businessman. He continues to find new niches. And their margins, like he definitely improved in the past
few quarters. A lot different than 2000. A lot different than 2000. But you can see it in the biotechs. You can see it in the unprofitable tech. They're having their crash. They're having their...
I mean, any company that needs to raise money, either through like stock offering or we're running out of time. Okay, let's call it a...
All right, see you, everybody.
All right. Stop.
See you, bud.
Bye.